Welcome to MoneyVerse USA, where we make money simple, smart, and achievable for everyone. If you've ever thought investing was only for the wealthy, financial experts, or people sitting in suits on Wall Street, you're not alone. Most people think investing requires thousands of dollars, complex charts, and insider knowledge. But here's the truth. You can start building wealth today, even with just $100. Yes, even in 2025 and 2026, while markets move fast and technology changes daily, small investors like you have more opportunities than ever before. You don't need expensive courses, fancy jargon, or a financial degree. You just need to understand a few key principles and take your first small step. By the end of this video, you'll know exactly where to put your first $100, how to make it grow, and what mistakes to avoid so you can invest confidently and start building your financial future. So grab your notebook, or better yet, open your Notes app, because you're about to see how even a single $100 bill can be the seed that grows your money tree. Why investing matters. Let's start with a question. Why should you even bother investing if you only have a small amount? I mean, what can $100 really do? The answer is inflation. In 2025, inflation is still quietly eating away at the value of your cash. That same $100 sitting in your wallet or savings account today might only buy $93 worth of goods next year. Prices rise, but your money stays the same, or worse, it shrinks in purchasing power. But when you invest, your money starts working for you instead of against you. Let's make this real. Imagine two friends, Alex and Jordan. Both start with $100 in January. Alex keeps his in a savings account earning just 0.5% per year. Jordan invests his $100 in an index fund that earns an average of 8% annually. After 10 years, Alex has about $105. Jordan is nearly $216. They started at the same place. The only difference was what they did with their money. That's the quiet power of investing. It's not about how much you start with. It's about letting time and growth multiply what you have. And here's the key point. Every dollar you invest is a tiny employee that works 24/7 for you. Even when you sleep, your money keeps earning. That's how financial freedom begins. The mindset shift you need. Before you jump into investing apps and ETFs, let's talk about mindset. Investing isn't about getting rich quick. It's about getting rich surely. Think of investing like planting a tree. You don't dig it up every week to check if it's growing. You water it, give it sunlight, and let time do the rest. One of the biggest secrets of successful investors is consistency. Even small, steady contributions, $20, $50, $100 a month, compound over time into something massive. Here's a mind-blowing example. If you invest $100 a month for 10 years at 8% growth, you'll have over $18,000. If you wait just 5 years to start, that drops to about $10,000. You didn't invest less money. You just started later. That's the cost of waiting. So the first mindset shift is simple but powerful. Start now, even if it's small, because every expert investor you admire, Warren Buffett, Cathie Wood, or whoever, once started with their first small step. And one more thing, stop comparing your beginning to someone else's middle. If you're investing your first $100 while someone else invests $10,000, that's okay. Your focus isn't their portfolio. It's your progress. Preparing to invest. Before you hit that shiny Invest Now button, let's get your foundation ready. Think of this as preparing the soil before planting that tree. Step 1. Build a tiny emergency fund. Even $300 to $500 can make a world of difference. Why? Because if your car breaks down or your phone dies, you won't have to pull your investments out at the worst time. Your emergency fund is like your financial safety net. It keeps you confident and calm no matter what happens. Step 2. Pay down high-interest debt. If you've got a credit card charging 20% interest, that's a guaranteed loss. There's no investment in the world that beats that kind of drain. So tackle that debt first, because paying off debt is actually a form of investing in your own cash flow. Step 3. Find hidden money. Here's a fun challenge. Open your bank statement or budgeting app, Mint, Rocket Money, or even Google Sheets. Look for one $20 or $30 subscription you barely use. Maybe Netflix, a gym membership, or an old app. Cancel it. Boom. That's your first investment money right there. The truth is, you don't always need more income. You just need more intentionality. When you take control of your spending, you make space for growth. Where your first $100 can go. All right, now for the part you've been waiting for. Where should your first $100 actually go? Let's break it down into 3 beginner-friendly options. Option 1, ETFs, exchange-traded funds. ETFs are like baskets of stocks. Instead of betting on one company, you own tiny pieces of hundreds of them. It's like buying a fruit basket instead of one apple. Even if one apple goes bad, you still have the rest of the fruit. Some of the most trusted beginner ETFs include VO tracks the S&P 500, America's top 500 companies. VTI covers the entire U.S. stock market. QQQ focuses on major tech companies like Apple, Amazon, and Google. The great thing about ETFs is that they're diversified, low cost, and easy to buy on any investing app. Option 2, fractional shares. Fractional shares mean you don't need to buy a full share of a company. Apps like Fidelity, Robinhood, Webull, or Public let you invest as little as $5 or $10. So yes, you can literally own a slice of Apple, Tesla, or Amazon without spending hundreds. This is perfect for beginners who want to learn while they earn. Option 3, high-yield savings or money market funds. If you're not quite ready for the stock market, this is your safe zone. These accounts earn 4 to 5% interest while keeping your money liquid, meaning you can access it anytime. They're perfect for short-term goals or your emergency fund. Pro tip, no matter which option you choose, turn on auto invest. Even $10 a week creates unstoppable momentum. You'll build wealth quietly in the background while you focus on your life. How to start today? Let's make this real. You don't need to overthink it. Here's how to start right now. Open your investing app, Fidelity, Robinhood, Schwab, Webull, or whichever you prefer. Search for a low-cost ETF like VO or VTI. Tap Buy. Enter your $100 and hit Confirm. Congratulations, you're now officially an investor. That's it. No magic, no special code, just action. You don't need to wait until you have more money or learn everything. Because the truth is, the perfect moment never comes. And every day you wait, your money loses potential growth. Even investing $25 every 2 weeks is infinitely better than waiting for someday. Remember this. The perfect time to start was yesterday. The next best time? Today. Common mistakes to avoid. All right, now let's protect your progress. Here are 3 common mistakes new investors make and how you can avoid them. Mistake number 1, trying to time the market. Even professionals can't do this consistently. Buying and selling based on predictions almost always backfires. Instead, focus on time in the market, not timing the market. Mistake number 2, panicking during dips. When prices fall, it's scary, but that's when the best investors get excited. Think of a market dip like a Black Friday sale on your favorite assets. You're not losing money unless you sell. Mistake number 3, chasing hype or meme coins. If something sounds too good to be true, it probably is. Avoid get-rich-quick traps, unverified crypto coins, or random TikTok stock tips. Stick with proven, reliable investments. Remember, you don't need to be perfect, just consistent. Because over time, consistency beats luck, hype, and fear. Reinvest and grow. Now here's where the real magic happens. Reinvesting. When your money earns returns through dividends, interest, or growth, don't cash it out. Let's stay in the system and grow on top of itself. That's called compound growth. Here's a quick example. Let's say your $100 earns an 8% return. That's $8 in a year. If you reinvest that, next year you're earning interest on $108, not $100. Do that year after year, and growth becomes exponential. That's why Einstein called compound interest the eighth wonder of the world. Those who understand it, earn it. Those who don't, pay it. Let your money compound quietly in the background. You won't notice much in a year or two, but in 5 or 10 years, it'll shock you. The bigger picture. Now let's zoom out. Investing isn't just about money. It's about freedom. Freedom to choose your work. Freedom to take time off. Freedom to live on your terms. When you invest, you're not just buying stocks. You're buying future time. Time where your money works for you, not the other way around. It's about breaking the paycheck to paycheck cycle and replacing it with a cycle of growth and security. And remember, every successful investor started with a first small step. Maybe $10, maybe $50, or maybe, like you, just $100. Thanks for watching MoneyVerse USA, where we make money simple, smart, and achievable. If this video helped you, do me a favor. Hit that like button, click subscribe, and share this video with someone who needs a simple start to investing. Because remember, you don't need to be rich to invest. You invest to become rich. Your financial journey doesn't start with a fortune. It starts with your next $100. See you in the next video, and welcome to the MoneyVerse.